everybody. It's 11:05. This is the AgYield War Room. Dan Dempsey, and I'll be moderating this session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Report just came out. We've got a lot of numbers to digest and go through here. Currently, markets, we've got corn up 7.5, beans are down penny and 3/4, and wheat is up 20 3/4 for July. Dustin, a few initial thoughts here on the report.
Yeah, I think wheat is definitely the story. That's why it's leading. But you know, they did come out with just an overall lower 2023 and 2024 corn carryout as well. So it by all accounts, it kind of looks a little bit bullish corn, bearish beans. It's just knee-jerk reaction. Just going through the WASDE demand side, though, however, if we're looking at where we came in for the Feb outlook, we had total demand at 14.7 billion bushels, 14.705, and it looks like they added up another 100 million bushels of demand. So that's where the drop came from, is a lower carry in and about 100 million bushels more of demand for corn. That's where they're adjusting their balance sheet. So again, USDA economist opinion, like we were talking about earlier, no yield changes on that front.
I would just say, I think, you know, looking at a 2-1 carry out with a 181 yield is going to be pretty supportive for corn. Yeah, it's a yield we have never proven, right? So to have only a 2-1 carry out, it's, you know, it's plenty if you have a 181 yield. But I think that, you know, that's why the market rightfully so is stronger today. That's not a lot of room, you know. I mean, I think quickly we're just getting into the growing season, right? So you start, what if it's a 175? What if it's, you know, all of a sudden you kind of get some pretty friendly S&Ds out there, I think, as people digest these numbers, you know, whereas in my opinion, as beans is 445, that's pretty burdensome, you know. So this is kind of a reaction to what I think the acres number said in March, right? If we don't pick up corn acres, and really the market's been doing the opposite. It's been incentivizing more bean acres this whole time. So my opinion, you know, I that's my reaction right away, just kind of still digesting everything. But
yeah, well, I mean, you know, this is the first, you know, immediately we got an adjustment on the ratio down to the lowest levels. If we settle here, the lowest levels we've been since we got that March 28th report. So the market is agreeing with you, Justin. It's they're saying, you know, corn, all of a sudden we have a path to corn tightness that we didn't have before on just small yield reductions. So and beans, the USDA is showing larger carryouts again. So I think beans have a bigger transition coming out of a tight year into a little bit more leeway on, you know, supply meeting up with demand a little easier.
And let's not forget that China doesn't have anything booked either for new crop too, you know. So,
yeah, been very slow on new crop.
Well, funds are short, right? I mean, I would have thought going to this report, even if it was bearish, I would think funds would have taken that opportunity to start covering their shorts going into this season. So this might really kind of shake that up, and you know, they might want to buy it a lot quicker, or maybe even get long. Wouldn't surprise me either.
Yeah, two weeks of fund short covering, and we'll get the rest of that data. If it's been 3 weeks, I'm pretty sure it has, but we'll see that this afternoon.
You want to touch briefly South America? I know they had a couple of adjustments there, and then where they were starting from for their news.
Looks like a low in the range for corn, right? Yeah. Brazil, which is good.
Yep. So I think, you know, 122 on Brazil corn, 154 beans. Yeah, there's still some debate about that. Justin, did you see the numbers? South America.
I did, yeah. I mean, it's, yeah, you know, they cut it to, I mean, like we talked about, it's more directional than the actual number to focus on. So, you know, they're admitting that the crop's a little smaller. So they're going to be slow to cut, you know, probably rightfully so with South America. But it's going that direction. So there's enough evidence that they feel like they need to cut something. I think, you know, the corn numbers, like, you know, addressing that we have had, you know, really good demand in corn. We've been talking about this for weeks and weeks and weeks about, you know, the export pace on corn, and, you know, beans. like I said, not trying to be too biased here, but it really is, I think, corn undervalued versus, soybean complex, especially after we just went through this huge short covering rally, dollar rally in beans, in a Brazil harvest. So, that doesn't mean beans can't rally. They might, beans might end up being the strongest one if that's, what they continue to want to buy. But a 445 carry out looks burdensome, and a 2-1 carry out in corn looks, like we have to prove a yield going into the growing season to me.
Yeah, last thing to touch on quick, Justin, on the wheat numbers. I mean, we did see a strong pop in the wheat complex. I know we've had some short covering and technicals have turned up and whatnot, but 766 for new crop carry out. Any just quick thoughts there?
Yeah, I would add though too, Justin, because if you look at that KC versus Chicago spread, it's down to only 13. So we're making new contract highs in the July Chicago wheat and not the July KC wheat as well.
Yeah, right. Yeah, I mean, it's the problem with soft red wheat in general. I mean, they cut the production of soft red wheat to 344. So they cut it over 100 million bushels. It's a big cut for soft red wheat. And the problem is, as we've talked about a lot of times too, is the size that these funds trade are multiple crop years worth of wheat, soft red wheat, and that's the contract, right? ZW. So when you're short something like that and you have to cover, there's not enough natural sellers to satisfy that buying, especially in the short run. And with, I think, sprinkled in with the technicals and other rolled wheats that are rallying, there's a lot of arguments always like, well, we're not selling any wheat. Like, it doesn't matter. If the world market's rallying and there's a short, it's painful to get out. And it seems like almost every time I can remember, when there's a big short, eventually they have to cover. And it's, usually a great opportunity if you're patient for a grower. You get this big $1 or $2 rally. At the end of the day, wheat's usually no good, but in the short run, it's going to be painful, especially with a friendly corn
That's what I was gonna
number.
say.
It's just the coarse grains all of a sudden look underpriced relatively.
Yeah, same guy short wheat or short corn, more than likely, right?
Yep.
Yep. Yeah, this is the highest July new crop wheat price for Chicago since the December 6th spike. So we've taken a lot of these people have been trading it for the last 6 months. They're likely underwater if they've been selling it too. So,
right.
Yeah, be interesting.
Yeah, your balance sheet's getting hit on all fronts, right? If you've just been this big, massive short of grains, you're getting hit on all fronts. So, beans could rally because they're also short beans, right? So if you look at it as, which one's better, when the dust settles and all the short covering's done, the quality ones, right, should stay higher. So, it's interesting. Soybean oil is up 200 points. There's just that's been relentlessly pounded for weeks and weeks and weeks. We talked about kind of the anti-dumping, all those kind of things yesterday that are starting to come into headlights. So it might just be a headwind for the big shorts right now, going into a growing season. Like, how much do you want to, is that the best bet you have, is to be short with these numbers? I'm not so sure on today's date. So.
Very good, guys. Any last few parting shots, Justin? Those were good comments. Dustin, anything on your side as we head into the weekend?
No, I'm happy to see the rally.
Yeah.
Yeah, we got a whole, it's one thing to rally, it's one thing to keep it, right? So good opportunities. We're back towards the highs of the move, a couple cents away in corn. So I think we've seen a lot of farmers selling going in the report. We've seen a lot of farmers selling on this rally. I think with these numbers, over the weekend, you'll get some good planting weather, so you'll get some hedge pressure. But we might have seen that the people that had to sell bushels, we might see that kind of dry up here, in my opinion, too.
Yeah, I think going forward too, updated GPS models show 6 to 10 wetter, but Europe's still staying dry.
So yeah, it's a bit of a split.
Yeah, these numbers, like now you have to look at, what if we lose corn acres? I know that's the immediate reaction on the March 31st was, hey, we're going to gain them. But ever since then, beans rallied against corn. We've had some, kind of a slower start, and not a panic by any means on planting, but nothing says that we should have gained corn acres. Not that we can't, obviously, but between now and June 30th is going to feel like an eternity if you're just a massive short. So I just think all these reasons kind of say that you would get flat. Technicals, fundamentals, like there's not a really good reason just to be short, you know, except for you just think it's going to go down, but nothing's telling you that right now.
Well, good stuff, fellas. Appreciate the feedback. Last here, real quick, new crop corn's up 8 3/4 for December. New crop beans are up 1204.5 is the last in the Nove. In July, wheat now up 20.5, 658 is the last. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Hope everybody has a great weekend, and we look forward to talking to you next week. Thanks.
Thanks.